Welcome back. We are now hearing major bull signals for many cryptocurrencies, including Goldfinch Crypto, Solana, and Celo, among many others. In today's video, we're going to be doing a deep dive on Goldfinch, Prime, borrowing, GFI cryptocurrency. We've talked about this previously on the channel, but there have been major updates to the protocol, to their business structure, and I'm actually extremely excited about this crypto. So we're going to do a little bit of a deep dive into Goldfinch, but we're going to start the video right here. Solana DeFi tokens are undervalued compared to Ethereum's, according to Franklin Templeton. They said there's a mismatch between the old guard and the new guard. Well. Let's get into this, and don't forget to give this video a free thumbs up. Also hit that subscribe button. That way you never miss a new video right here on the channel. So according to Franklin Templeton, they say that the tokens are worthless in Ethereum, at least. Solana DeFi valuation multiples trade on average lower than their Ethereum counterparts, despite significantly higher growth profiles, highlighting an apparent valuation asymmetry. Franklin Templeton compared tokens of the 5 leading Ethereum projects, which are Lido, Aave, Ina, Maker, and Uniswap, to those of the 5 of Solana's strongest protocols: JTO, which I think is Jito, JUP, which I think is Jupiter, KMNO, MNDE, and Ray. The Solana project saw 2,400% median growth in fees year over year and a median multiple of 9x, whereas Ethereum projects were only up 150% and a multiple of 18x. This trend comes after a year of torrid growth for Solana. Meme coin traders particularly powered the network's DEXs to new highs last year in 2024 and 2025. In January, Solana DEXs had more volume than those of the entire Ethereum ecosystem. According to the report from this financial institution, Franklin Templeton, they said DeFi may be entering an era of Solana virtual machine dominance, shifting away from a historical reign of Ethereum virtual machine-based DeFi. Well. Let's be clear here. They say this first. They say as Solana continues to demonstrate its resilience as a decentralized computing platform, the market may soon price blue chip cornerstone Solana DeFi protocols in line with comparable Ethereum protocols. My overall opinion on this is no way. And let me explain why. Okay, a lot of this volume that we've seen, and you guys got to be really careful, because the fact that traditional financial institution, Franklin Templeton, is, I wouldn't say it's misinformation or convoluted info. Like, I would just say they're gearing it to the way that they want it to look, right? Because they're saying, oh well, all the DEX activity outweighed Ethereum's. Well, yeah, because it was all BS volume. Meme coin transaction volume is not real volume on the network, right? I get it. People are going to say, but Cryptoviser, it is real volume. Yeah, it is real volume on the network, but is it sustainable? The answer to that is absolutely not. I mean, we have seen Solana activity significantly decrease if you're looking at actually people who are using the network. Just because volume is still very high on the network doesn't mean that like people haven't left the ecosystem. Why have we lost 50% of value in Solana? It's because the meme coin ecosystem is collapsing. And not only the meme coin ecosystem is collapsing, right? And it may be a delayed collapse, but it's collapsing. The Solana coin is as well, because when people exit the meme coins, they're exiting Solana as well, and they're going to stable coins and bridging to other ecosystems like Ethereum, right? Because Ethereum's volume is not based on meme coins. This is the same thing that people were doing last cycle. They were saying, oh my God, look at the activity on chain. And it was all NFT transactions. And as we covered in the last cycle, NFTs were all being wash traded, right? I owned an NFT. I wanted to increase the value of it. So I'd sell it to myself for like, $1,000. Then I'd sell it to myself again for $10,000. Then I sell it to myself for $100,000. Then I sell it to myself for $1 million. And people were saying, oh, look, all these NFTs are worth $5 million. I'm like, these NFTs are worth nothing. They're worth nothing. People are like, no, Cryptoviser, you're wrong. These NFTs are the future. These are the most amazing. It's not worth $5 million. It's not even worth $5,000. It's not even worth $50. So yeah, the same thing is happening with the meme coins, right? Solana's activity and DEX activity and transaction activity, this is being inflated due to the meme coin frenzy. But when people get back to fundamentals and stop, well, people realize at this point, I believe, that meme coins is bullshit. But there's a lot of people that still are going to trade it and still think they're going to make money off of it, right? We still have celebrities launching coins and all of this, but this is not real activity on the blockchain, right? This is like other ecosystems saying that NFT ecosystem and their NFT volume should be part of the regular transaction volume. It's like, no, it's not. It's not real volume. Anyway, so listen, I don't know about this. I don't think that Solana's DeFi tokens are undervalued. If anything, I think Solana's ecosystem is overvalued because after 2 years of a bear market with Solana, the only thing that they've come out with has been meme coins. No actual technology that we can use in everyday life and back end integrate into financial systems. So is that investable or am I going to stick with Ethereum? Personally, Ethereum. Moving right along, not just Ethereum, but also Ethereum based or Ethereum adjacent blockchains like Celo. Celo is going to be launching Celo Layer 2 mainnet on March 26th. Now, during my break from YouTube here, there was a lot of drama, it seemed like, with Celo. Celo was going to be upgrading to their own Layer 2 or Layer 1. I don't know. They were going to be upgrading their mainnet. And then we had exchanges saying that they're going to support the upgrade, and then exchanges saying that they're not going to support the upgrade. I think Coinbase said they weren't going to support it, and the Celo community went crazy. And basically, Coinbase reversed and said they'll support the previous Celo, not the new one, or something like that. But either way, everything seems to be good now. I don't know. It seems like when the market is rotating, right, whether it's into a bull market or into a bear market, I do think that we're already in the bull market, but I think we're rotating into like the final stages of the bull market. We see a lot of these launches, and this is another indicator that we are close to or at the top of the market. Is, people are trying to justify why their coin is undervalued because the other coins are overvalued. And it's like, no, Franklin Templeton, that's not what the situation is. If anything, Solana DeFi is overvalued because the only thing that we've seen launched is meme coins, which have been a complete and utter disaster. Anyway, Celo, I've been very bullish on for a very long time. This is from this month. Celo is going to become a Ethereum Layer 2 on March 26th. The mainnet activation will occur in a hard fork, initiating the network's operation as an Ethereum Layer 2. Again, this is very in line with my thesis that the narrative is shifting from Solana to Ethereum. That would actually be a great title for this video. From Solana to Ethereum. Yeah, I actually like that a lot. Anyway, moving right along. Anyway, so I believe that we are seeing this shift away from Solana into Ethereum. And Ethereum is preparing for this next upgrade, the Pectra upgrade, which is going to enhance the network and add new features. And while that's happening, we're seeing a lot of other blockchains kind of getting ready for Ethereum's narrative shift, and they're kind of trying to align with that. And so if Ethereum starts to move higher, we are going to see these Ethereum Layer 2s or Ethereum adjacent cryptos, I believe, move much higher. And this is, remember, half the valuation of Solana. So Solana right now is worth about $74 billion. So basically about $50 to $70 billion was extracted from Solana over the last few months because the valuation didn't just disappear when the price went down. The money went somewhere else. Where'd it go? Probably stable coins for the time being, but eventually that money was going to be pouring into other ecosystems. Highly likely Ethereum-based coins, Celo. We also heard just a few weeks ago that Celo, Chainlink, and Hyperlane launched a cross-chain USDT on the Optimism superchain. So they essentially created Super Tether. Highly interoperable, cross-chain functionality. They are connected to the world of DeFi. There are still coins out here, guys, that have no connection to DeFi, that are in the top 50. They shouldn't even be in the top 100. No interoperability. It's crazy. But talking about DeFi, real world assets, Ethereum type, adjacent type coins, let's talk about Goldfinch. And by the way, don't forget to give this video a free thumbs up. Now, I think those videos are still up on the channel, but we've talked about Goldfinch previously during the bear market. I was very bullish about Goldfinch. I'm still bullish about Goldfinch. I mean, if we look at where we talked about Goldfinch, we talked about it last year in 2024. You could see the price was in, from 2023, 30 cents. It went all the way up to $4 or $5. So almost a 15x. 15x. And that was barely the bull market yet. And since then, we've come down fairly substantially. We went from $5 and now we're down to 80 cents. So it's like a 75, 80% drop. Significant drop, right? But we have to understand what Goldfinch is. Goldfinch is basically a private credit protocol, right? And just last year, this article is from about 5 months ago. It says crypto lender Goldfinch is seeking new advisor after the previous hire, who was scheduled to make $135,000 over 6 months, was seen by some restrictive lenders as ghosting them. The advisor resigned from the crypto lending protocol to pursue full-time opportunities, according to a copy of the resignation letter. The advisor said any lack of communication with the lenders was during a transition period near the end or after my last day of work in October. But Goldfinch lenders hadn't been told of his impending departure. Even the advisor defaulted on us, one user in Goldfinch's Discord stated, according to this article. Now, granted, they probably had some issues, right? I do remember, if we look at their dashboard, this is their old dashboard. They had a lot of losses, which I thought was concerning for the future of Goldfinch. But I'm going to explain why it may not matter in just a minute. But if we look here, Goldfinch has one late payment, $10 million, another default payment, $10 million. They're restructuring. Look, all of these loans, $11 million, $5 million, $10 million, $5 million. They're restructuring these loans. So they have a loss rate right now of about 15%, which I don't know what a good loss rate is. I think a good loss rate is 0, but 15% seems pretty high. One of my concerns when I first started researching Goldfinch, and by the way, I own Goldfinch and I'm very bullish on it, but one of my concerns was that they're loaning money to all these like companies in the middle of Africa. And they're giving them like $10 million, which in the US, 10 million is like, well, what are you going to, could maybe have a company run for a few years with a few employees, pretty lean. But I would imagine in Africa, the cost of living is much, much lower. So you're giving a company $10 million, you would imagine they're going to be able to actually produce something within 2 years, right? At least that's what you would imagine. And clearly that's not what happened, because a lot of them are in default or restructuring these payments. And I was worried because I'm like 15% loss rate, and this is not even a big protocol. They only have $60 million in loans and they have 15% loss. It's a pretty big number. And so I was concerned, but we're now seeing a lot of changes to Goldfinch, complete changes to the way that they're operating the business, the way they're operating the loans. And this is making me even more excited about this crypto and this ecosystem of Goldfinch. So let's learn a little bit more. Goldfinch Prime brings on-chain exposure to thousands of loans from the world's largest private credit firms. This is from a Goldfinch blog from last month in 2025. The Goldfinch protocol, which previously lent over $100 million on-chain, announced that it's bringing its first-of-its-kind exposure to institutional-grade private credit funds on-chain in a pool called Goldfinch Prime. Goldfinch Prime will provide non-US investors with a single diversified pool with exposure to thousands of loans from leading private credit firms that collectively manage over $1 trillion in assets under management, including Apollo Global Management, Ares Management, and Golub Capital. With VanEck projecting the tokenized real-world asset market has surpassed $50 billion this year, Goldfinch Prime is positioned to expand global investor access to high-quality private credit funds on-chain. According to the co founder of Goldfinch, Mike, he said Goldfinch Prime is leading the evolution of real world assets as a category. Our goal is to be the leader in bringing the largest institutions on chain as private credit expands in 2025 by bringing exposure to some of the world's most trusted private credit managers on chain. Along with strict compliance standards, we can increase the quality of private credit investing options available to investors globally. Um, so this pool, this Goldfinch Prime pool, will offer users exposure to institutional grade private credit, targeting returns of 9 to 12% net of fees. All the private credit funds in the Goldfinch Prime pool will meet the following stringent criteria. One, managed by institutional firms with at least $1 billion assets under management and 10 years of private credit experience. Portfolios with expected 90% or more secure senior secured loans and less than 5% payment in kind interest income. They target average non-accrual loan rate of under 1%, and funds must be registered with the SEC with robust quarterly reporting. Now, what's interesting here is they're targeting non-US investors, but they want these funds to be SEC regulated. Now, I would imagine a lot of this has to do with regulations in the US. They don't yet affect private credit markets like Goldfinch or these private credit pools on chain. So maybe in future legislation that will clear this up for this type of project. But this is very interesting because previously you could invest in the deal, right? So you basically loan your money. They Goldfinch would loan it out to one of these projects that asked them for money. But as you can see, that was not a sustainable business model, right? They lost too much money. And so now this is Goldfinch Prime. And by the way, one of the reasons I'm extremely bullish on this is because one, it's backed by USDC and Coinbase, right? Some of the employees who founded Goldfinch come from Coinbase or USDC, Circle. So in the new Goldfinch Prime dashboard, which you can see on the Goldfinch website, it says unprecedented on-chain exposure to the world's leading institutional grade private funds, net estimated yield 10 to 12%. So effectively, you would loan your crypto to Goldfinch, right? USDC. They buy into this is basically tokenized real world assets, right? You're taking funds that are on the traditional market and you're tokenizing them in this protocol. So if you're investing, this is what you're going to be targeting 10 to 12% returns, while Goldfinch is investing in 1,000 plus loans, where the managers of all of these funds and credit markets have over $1 trillion. So this is significantly less risky, right? It's not there's not no risk. There's definitely risk. But this is less risky because instead of Goldfinch being kind of the middleman, the bank, right? The one loaning and borrowing to the people, this is going and basically instead of investing in these individual companies that Goldfinch would, throughout the world that may or may not do anything, may or may not be even able to repay the loan, right? They're now taking that money, that pool, and instead of investing it in these private borrowing and lending, I should say, they're investing in these credit markets, these private credit markets where these large institutions are potentially, loaning out millions or billions of dollars to build things, buy properties, businesses, all these different types of things, right? That's what the debt funds. And so you can see what kind of sectors it invests in, what funds it invests in. Right now, there's 4 funds. One is the Eris Strategic Income Fund. This corporation has a track record of over 25 years as a global alternative investment manager. The Apollo Debt Solutions Fund. This has over 30 years experience as an institutional investment manager. They seek to provide diversified path to more beneficial risk-adjusted profile than the public equivalents. They focus on senior secured large corporate direct origination, broadly syndicated loans, and to a lesser extent, middle market direct lending. Golub Capital Private Credit Fund. This is a specialist with U.S. private credit with 30-year track record. They invest predominantly in first lien, senior secured, floating rate loans The fund seeks to deliver current income and capital appreciation by investing in a diversified portfolio of directly originated loans of U.S. middle market and upper middle market private companies and stellar private credit. So you can see that this is significantly lowering the risk because you're investing in these funds where they have proven track records of investing or purchasing these, very high level type loan structures. It's the easiest way to kind of explain it. To me, this is a great strategy for Goldfinch because this is really, I think, what people are looking for in the crypto world, in the digital finance world. They're looking for this kind of bridge from the traditional financial world to this digital world. And it's all transparent. It's done on chain. It's done with crypto. It's backed by Coinbase, right? The people from Coinbase, I should say. So, but again, it's really funny that they're targeting non-US persons, but their requirements are US based. So I'm sure that will change at some point in the future. The management fee is 1%. They do this all on the base network, the Coinbase network. And yeah, you can see all the loans. They have 1,274 loans. It shows you the allocation into all these different companies that I guess issue the debt. And so, yeah, really interesting kind of updates from Goldfinch. They are on DeFi Llama. You can see their Dune Analytics dashboard as well. And you can see the info here is the same. It shows the loss rate is at 15%, which is very high. And the loss rate, it looks like they just took all the losses at the beginning of 2025, which if we go to their legacy dashboard, you can see all these restructurings. I mean, this is 2 million, 10 million, so it's 12 million, 22 million, 33 million, 38 million, 48 million, 53 million. Geez. So they basically have $53 million of loans that are being restructured and another 20 million that are late or in default. I mean, it's pretty bad, right? I mean, I would say that first iteration of Goldfinch was not a large success, but they pivoted. And this is the most important thing from an investment perspective, in my view, is the pivot, right? Can these projects pivot? Can they adjust to what the market is wanting, to what the users are wanting, to what the global regulatory environment wants? If the answer is yes, they're probably going to succeed. If the answer is no, well, it's probably not investable. And so this is one of the reasons that I did this video on Goldfinch, because I want us to be able to look at all of these assets, even outside the top 100, 200, 300. I mean, Goldfinch, it's number 742 on the market charts. The market cap is $24 million, very, very low. And it's probably come down more substantially recently because of these loan defaults. But if they can get this new loan structure and loan portfolio marketed so that people understand what it is, these companies understand real world assets, starts with Goldfinch, I potentially think that we're going to see a run up significantly higher than what we saw in the previous year, going up to $5 from 30 cents, 15x. So anyway, I'd love to hear what you guys think about Goldfinch and everything else we discussed today. Do you agree with my thesis about, Solana and Ethereum-based coins, that Ethereum is still number one and will continue to be number one? And this whole kind of twisting the story to try to make it seem like Solana is undervalued and so. Okay, Solana is the best performing asset this cycle. Bottom line, it is the best performing asset. Better than Bitcoin, better than Ethereum. Solana is the best. It went from $8 at the FTX collapse. You can see that right here. 2022, we went down to $8. It's showing $9, but the low was $8. So from $8 to $250, and people are like, oh no, Solana's undervalued. It's like, what? What are you guys missing? It's not undervalued. If anything, it's overvalued. And these other assets are undervalued, like Ethereum. How can they be saying that Solana is undervalued when literally Ethereum is undervalued. Like, that makes no sense. Solana is overvalued, Ethereum is undervalued. That's the way that it is. That may change very soon, and I hope it does, because Ethereum and the Ethereum layer 2s and Ethereum adjacent cryptos and blockchains, these guys, they have been endlessly working over the last few years to build new products, build new technologies, build new consumer-facing products for the ecosystem. And I think things like Goldfinch, Celo, Polygon, the Optimism super chain, these are all going to, hopefully at least, perform extremely well when we see all this whining about these other coins being undervalued stop and the fundamentals really be looked at. Because fundamentally, Ethereum should be much higher priced. Celo, much higher priced. Optimism, Arbitrum, Polygon, all of them much higher priced. But meanwhile, we see Pi coming into the top 10. Like, what is that? What is Pi? Nobody knows. Five years, nobody knows what Pi is. But it's in the top 10. You guys, let me know how that works. Anyway, don't forget to give the video a thumbs up, hit that subscribe button. We upload as much as possible to keep you on top of the latest happening in the financial world. I'll see you when I see you. Crypto on.